Hello everyone, welcome back to our tab and welcome to Finance Current Affairs session. In today's session, we are going to discuss the highlights that has been released by the Reserve Bank of India for the report on trend and progress of banking in India for the period of 2021-22. So the RBI has released the highlights and they are very important for us to understand, and the data in the highlights is very important for you to remember, okay? Because direct questions can come in the examination from the highlights that is given by the Reserve Bank of India. As well as we are going to discuss that what is the progress that has come in the urban cooperative banks and in the non-banking financial institutions. So all of this we are going to discuss in today's session. So this is a very important session, but before starting with this session, there is a big announcement from EduTab that we have brought for you the comprehensive guide for RBI, NABARD and SEBI. So through a single guidebook, you can get all your common queries answered. If you want to know about the examination, that what is the pattern for the exam, what are the previous year cutoff for the exam, and what is the syllabus for the exam, all these common queries can be answered through a single guidebook. You do not have to visit different links, you do not have to visit different websites. Even if you want to know about the preparation, that what should be the strategy for the preparation, what should be the sources for the preparation, all of these common queries can be answered through this single guidebook. And let me tell you that this is absolutely free of cost, to save your time, to save your efforts, and you can easily download these guidebooks. The link is provided in the description box below, and do download these guidebooks. They are going to enhance the level of your understanding for the examination. Okay, so now coming to today's topic, that is regarding the highlights that is given by the Reserve Bank of India. So the RBI has released the highlights for the report on trend and progress of banking in India 2021-22. So the RBI has released this report, and this is a huge report that is released by the Reserve Bank of India, and this report is released in compliance with section 36(2) of the Banking Regulation Act 1949, and this report presents the performance of the banking sector, including the cooperative banks and the non-banking financial institutions. So we have already discussed that what is the progress, what is the performance of the banking sector of the scheduled commercial banks. And this is the most important point in the report, the performance of the scheduled commercial banks. Now the RBI has provided the highlights, and you can understand that these points are very important points from the report. So we have already discussed regarding the scheduled commercial banks. First of all, the scheduled commercial banks, after a gap of 7 years, they have seen double-digit growth in their consolidated balance sheet. This was led by the credit growth. That was a 10-year high in first half of the 2022-23. Second is the capital to risk weighted asset ratio. This also increased from 16.3% to 16.8% at end March 2022. So this is the year-on-year growth that has been seen in the capital to risk weighted asset ratio. With all banks, all the scheduled commercial banks, they are meeting the minimum regulatory criteria, that is for the capital to risk weighted asset ratio, that is, or the capital adequacy ratio. The minimum requirement is 11.5% for the scheduled commercial banks, and all the scheduled commercial banks, the data is on average they are maintaining 16.8%. So this is higher than the 11.5% of costly. So the common equity tier 1 ratio, the minimum requirement is 8%, and this is also maintained. This is also maintained by the scheduled commercial banks. So you can understand that the banks are keeping good capital adequacy ratio. They are keeping good capital buffers with themselves. So we have already discussed about this data in the previous session. The gross non-performing assets has also reduced to 5.8% at end March 2022, and it came down to 5% at the end of September 2022. So the gross non-performing assets are continuously decreasing, and that is a very good news for the banks, because the asset quality is improving when the non-performing assets are decreasing. Okay. So this was led by lower slippages as well as reduction in outstanding GNPA. So we have discussed that the lower slippages are happening, lower amount of lower number of the loans are becoming NPAs. Okay, so the lower slippages are happening as well as the outstanding GNPAs are also reducing. An acceleration in income has been seen by the banks because there is more credit growth. That means more interest income is coming to the banks, and there is moderated or less deposit that is happening. So less income interest expenditure is happening by the banks. So the acceleration in income has happened because more interest income is coming to the banks because they are giving more loans, and less interest expenditure is happening by the banks because less deposits are happening to the banks. So the contraction in expenditure has happened due to the less interest expenditure, and this has boosted the profitability of the banks because more interest income is happening and less interest expenditure is happening. So this has boosted the profitability of the scheduled commercial banks in 2021-22. And in terms of, this is measured in terms of return on equity and return on assets. So assets are the loans of the bank. So these are the most important points that has been given in the report on trend and progress of banking in India for the scheduled commercial banks. Now coming to the financial performance of urban cooperative banks. So it has showed, the report has showed the improvement in 2021-22. This was characterized by augmented capital buffers. So good capital buffers were maintained by the urban cooperative banks also. A decline was seen in the GNPA ratio, that is the asset quality is improving for the urban cooperative banks also, and improved profitability is also happening for the urban cooperative banks. Okay, for the NBFC sector, for the non-banking financial companies sector, they maintain comfortable liquidity buffers. So they were maintaining good buffers. Adequate provisioning they were doing against the NPAs, non-performing assets. They were keeping good provisions. A strong capital position was seen during the 2021-22 for the NBFC sector. So we will see the supporting data now. I hope you have understood. For the scheduled commercial banks, these are the highlights, and for the urban cooperative banks and for the financial sector. So now coming to the capital buffers that the urban cooperative banks are maintaining. So you can see as per the 2022 data that has been given. So the urban cooperative banks were maintaining by the end of March 2022, they were maintaining 15.6% of the capital adequacy ratio, or the capital to risk weighted asset ratio. Okay, so that this is of course very high to the minimum requirement that the urban cooperative banks have to maintain, that is they have to maintain 11.5% of the CRAR, that is the minimum that they have to maintain. So they are keeping 15.6% by the end of the financial year of 2021-22. So that is the very good news. So they are keeping good capital adequacy ratio, especially if we see from the prior year, the capital adequacy ratio they are maintaining has increased. Okay, now non-performing assets. So the gross non-performing asset ratio has decreased from the previous financial year. So it has decreased to 9.7%, as well as the net non-performing asset has also decreased from the previous financial year. So it has decreased to 4.4%. So the NNPA and the GNPA both has decreased in the financial year 2021-22. So you can understand that the GNPA and NPA both were decreasing. That means the asset quality is improving, was improving in the financial year of 2021-22. As well as the provisioning coverage ratio, that is to cover the gross non-performing assets that is happening, they were maintaining higher provision coverage ratio. So they were maintaining higher PCR to cover their gross non-performing assets. So they were keeping higher provisions with themselves so they can cover the gross non-performing assets that are happening. So this was also higher. So the asset quality has been higher in the financial year 2021-22, as well as the provisioning coverage ratio was also higher in the financial year 2021-22. So this shows the strength and resilience of the urban cooperative banks, as well as the CRAR was also higher in the financial year 2021-22. So now coming to the non-banking financial institutions. So first of all, this is the structure for the non-banking financial institutions. Starting with all India financial institutions, that are the non-banking financial institutions. So we have 5 all India financial institutions. You should know the name of each. That is NABARD, SEBI, Exim Bank, NHB and the NABFID. So these are the 5 all India financial institutions. Now coming to the non-banking financial companies. So they are the deposit. There are only a few deposit taking NBFCs that can take the deposits from the customers, from the people from the public. So the deposit taking NBFCs are very important for the country, because if they are falling down, that means the deposits that the people have with these NBFCs, now they are not going to get the deposits. So the public will be in the unrest, and the public will lose trust in the financial system of the country, because the public has the deposits with these NBFCs. So that's why the deposit taking NBFCs are a different category, are a separate category, and they are considered systematically important for the country, because they are taking the deposits of the public and they are directly engaged with the public. Next is NBFCs that are non-deposit taking. So they are not taking any deposits. Still there are some NBFCs that are non-deposit taking. Those are systematically important because they have huge size. They are quite interconnected with the other financial institutions. So if they fall down, the other financial institutions can be affected, as well as they have huge size also. So these are the NBFCs that are non-deposit taking, but they are systematically important. The most of the NBFCs are the non-deposit taking NBFCs that are not very systematically important. They are small non-deposit taking NBFCs, we can say. Then there is the asset reconstruction companies that take the bad assets or that take the bad loans of the banking institutions, of the other institutions, and they try to reconstruct the loans, okay, the bad loans. Now coming to the housing finance companies is the fourth kind of non-banking financial companies. So there are also the primary dealers that directly deal with the public. So it is the bank primary dealers and the standalone primary dealers. So the standalone primary dealers are not connected with any particular bank. So I hope you have understood the structure of the non-banking financial institutions, which is broadly categorized into three categories. First is all India financial institutions, second is non-banking financial companies, and third is primary dealers. Okay, so after understanding this, now let's see the NBFC sector, that how they have maintained the comfortable liquidity and capital buffers. So here we can see that the NBFC sector has maintained 27.6% of the CRAR by the end of March 2022. So that is quite high. 27.6% of the capital buffer they were maintaining against the risk weighted assets. So you can understand that the NBFCs were keeping good capital buffers, okay, and this is higher than the previous year. This is higher than the previous financial year. So you can understand that they have actually improved their capital buffers. If you see regarding the NBFC's deposit taking, the CRAR they were maintaining 24.8%. That is also a good number, okay. Now coming to the GNPA ratio, this has declined for the non-banking financial companies, that is the deposit taking NBFCs, that are the important NBFCs that are directly connected with the public. So their gross non-performing assets has reduced. Their net non-performing asset ratio has also reduced. So this is a good news that they are having good asset quality. They are having improved asset quality because their gross and net non-performing assets have reduced. So you do not have to remember the data, only the complete CRAR. Try to remember this data just. This is just to show you that, remember that asset quality has improved means that their gross non-performing asset and the net non-performing asset has reduced. So here you can see for the overall the NBFCs that are non-deposit taking and that are systematically important, their gross non-performing asset has also decreased and their net non-performing asset has also decreased. So you have to remember that for the NBFCs that are systematically important, that is the deposit taking NBFCs, the non-deposit taking NBFCs that are systematically important, their asset quality has improved, okay. So now coming to the digital payments index, we have understood about the urban cooperative banks, we have understood about the non-banking financial companies. Now in the report there was also the discussion about the digital payment index, okay. This is the index that is released by the Reserve Bank of India, and this index tells us the extent of the digitalization that has happened of the payments across the country. So this shows us the penetration of the digital payments as well as the deepening of the digital payments that is happening, the expansion of the digital payments that is happening in the country. So this is the Reserve Bank of India Digital Payment Index that is calculated by Reserve Bank of India, that is released by the Reserve Bank of India. So the RBI had announced construction of a composite RBI DPI with March 2018 as base. So March 2018 was the base and it was 100. So you can see that continuously with the passing years, continuously there is the growth that is happening in the digital payment index. And by March 2022, because the report is only talking about till March 2022, because it is for the report is for the financial year of April 2021 to March 2022. So till March 2022, you can see that the digital payment index is actually increasing continuously, and it was 349.3 in March 2022. So we have seen such a high growth since March 2018 till March 2022. So across the country, the base is taken as March 2018, and this index shows us the digitization of payments across the country. The index for March 2022 stands at 349.30 as against 304.06 from September 2021, which was announced at this date. So just what you have to remember, that March 2022 the index was 349.3, and there is continuous improvement that has happened since March 18, which is also the base. Okay. So now I hope you have understood the report very clearly. There were some important data points that I have shown you, and I hope you will remember that. So here is the first question for you all. I hope you will be easily able to answer this question. So here directly, by seeing the question only, by seeing the statements only, you should be able to see that what is the problem and what is the incorrect statement. Okay, this is the second question that you have to answer. So the CRAR, the capital adequacy ratio or the capital to risk weighted asset ratio, has increased from 16.3% to what percentage on March 2022, and with all banks meeting the regulatory minimum requirement, capital requirement of 11.5%, you have to tell the minimum requirement of the common equity tier 1 ratio. Okay, so this was also defined in the highlights also. This was also given in the highlights also, as well as of course it is also in the report, and this is a very important point. Okay, the minimum requirements you should know. Next, this question, I hope you will be easily able to answer this question. So the contingent liabilities, this was not in the highlights, but this was in most of the most important newspapers were covering the contingent liabilities point. So you should remember, as well as there is 11-year high, the highest in the 11-year we have seen. So of course you should remember this percentage that we have discussed in the previous session. So this is the last question that I hope you will be able to easily answer. Okay, so that you have to tell that which is the base year that we are taking, okay, for the Reserve Bank of India digital payment index. So regarding the digital payment index, there were questions in the Reserve Bank of India grade B paper, and there was like in 2 continuous years there were questions regarding the Reserve Bank of India digital payment index. Now there are 5 broad parameters on which this Reserve Bank of India digital payment index depends on. Now which are those 5 broad parameters that you should remember? I have taken the sessions on the Reserve Bank of India digital payment index, where we have discussed the 5 broad parameters and their sub parameters also. So you should know the 5 broad parameters. Okay, if you do not know, either see the session or you can search it. Okay, or we will discuss it in the some coming session. Now there is a big announcement for you all that I'm going to take a revision session on all the important reports that are released in the previous 1-2 months. Okay, so that is the FSR we are going to discuss. We are going to do the revision of the report on trend and progress also. We are going to do the revision on the ombudsman also. We are going to discuss the Utkarsh report also. So all these reports we are going to revise on Saturday 10 AM. We are going to revise all the important reports that has been released recently by the RBI, because the RBI Grade B paper is expected soon only, and we can expect the questions from these very important reports that is released by the RBI. Okay, so let's do the revision session and let's see that how much you remember from all these reports. Now we remember the points from different reports, but when the question comes in the exam now, then how much we are able to remember, that also we have to see, right? So we will do a revision session on Saturday 10 AM. I was getting a lot of mails that they want combined questions of all the reports. So let's do the revision session on Saturday 10 AM. Be present at that time and let's see that how much you remember. Okay. So thank you very much. Do subscribe to our YouTube channel. Join our Telegram channel for the PDF of this session. And if you have any query, you can mail us here or you can contact us through this number. Thank you very much, everyone.